What we're going to be talking about today, what I do is focus on single family, but today is a little bit more of a general conversation about real estate investing less stupid. Based off this book, what I teach and preach people to do is ultimately why I got started in this business. Well, it's not the main driving reason, but I wanted to create a wealth and abundance in all areas of life, spiritually, physically, financially, and relationally. And one of the ways that we have to do when creating wealth is to implement things that have been proven to work already. And then we have to have the discipline to do those things and just show up each and every day consistently over time. So this is a phenomenal book. I started rereading this again a couple of weeks ago. And I'm like, man, I got to share this because a lot of people don't know about Keith Cunningham or his story or even about this book. We're going to talk about investing less stupid because a lot of people think like, I've got to do all these things and I got to be really smart. It's not really that true. Like, you don't have to be that smart. You just need to be less stupid because the things that we need to do and execute on real estate, they're not that complicated. If we're consistent, we're disciplined, and we avoid some of the dumb mistakes. But a lot of times people fall in this trap. If you're a real estate investor and your biggest excuse is I can't get funding, I can't get capital, me and Robinson are going to call you out on that and say, nope, that's not true. Here we are. Money is attracted to good deals and trustworthy people. It's that simple. Quick disclaimer, guys, I'm not giving you guys investing advice here. This is educational, informational. So I'm getting this recorded that nothing I'm doing is financial, legal, tax, or investment advice. Anything you do, you're doing at your own risk. So consult with professionals before you invest. Smart thing to do. So the mission statement, real quick, for those of you who are new, is my mission statement in life, which is to motivate, educate, and inspire and equip others to create the life and business that they desire by leading through example. Meaning I'm out on the front lines each and every day, working hard to create the life and business that I desire in all areas of life, in my faith with God, my relationships with my family and loved ones, and my health and fitness, and financially through investing in business. And I just share my bumps, my bruises, my wins, my losses, and just try to be transparent with you guys and motivate you guys to go out and do what you want to do. I had some mentoring and some people that poured into me in the beginning that I'm very grateful for. And so this is a way for me to give back, but I don't want it to fall on deaf ears. So I like to say, like, really ideally what I want to happen here for those of you who are coming is to get plugged in and go out and take action and do deals, because you're never going to accomplish anything by sitting on the sidelines. Are there bumps? Are there bruises? Is it hard? Is it difficult at times when you're going through investment deals and projects and raising capital and all that? So yeah, it is. It's really hard. But I will tell you, the more time that you spend on doing the hard things, your life and your business will get easier. The less time that you spend working on the hard things, your life and your business will get more difficult. So if you neglect things today and you put off what you know you should be doing, your life is going to get more difficult in the future. But if you begin investing today and you begin doing those hard things, your life, your business will move in the direction you want to go. That's been my experience. Doesn't mean it's easy. It just means it's worth it. So what I teach, what I preach, and what I do is, well, there's a quote that says, I'll just say it's like Mark Twain. It's like the older and older I get, like I pay less attention to what men say, and I just watch what they do. It's pretty wise words there, right? So I've got someone in my life and they're positive minded. They speak positive things quite a bit, but I had to have a conversation with them the other day. And I said, I don't need the words. Your words sound great. I need the fruit, is how he said he'll judge us, right? I said, I need some fruit here. I don't need the words. Don't need them at all. I need the action. So what I'm sharing with you guys is built off actions. Okay. So we're talking about investing less stupid. Well, for me, after doing this for 18 years, I've done a lot of stupid things. I've done a lot of things. Man, I wish I could have that back. And there's no take backs in real estate and in business, but there's lessons to learn. So that's what we're going to be covering today. And the lessons that I've learned, I've put into these 5 fundamentals of real estate investing to create a map for me and my team and for people that I teach and coach. So everything that I teach is based off fundamentals, and that's how I live my life through business, through life, and etc. Those of you who don't know me, you were asking earlier, started 18 years ago, broke, living in an apartment, used a credit card to buy my first deal, done 500 plus deals since then, majority single family, but we've ventured into mobile home parks, RV parks, land syndication deals, subdivision developments, We're doing a commercial development that we're under contract right now in Green, Texas. Done quite a few things, and where I brag or boast for just a minute here, but it's not bragging or to impress anybody, but I believe wholeheartedly in what I do, because starting with nothing and saying that we've done this amount of deals, paid out over 10,000 mortgages and not missed a single one payment to any of my lenders says something that there's some things here that we're doing that work. Okay. So I share that because there's a lot of gurus and people out there that are teaching and preaching something that honestly, like, it didn't even work for them, but they know it and they're teaching it. They're trying to sell a course or what have you. I'm like, no, what we do works if you do it the right way and avoid some of the stupid mistakes we'll be talking about today. So each and every week, ask you guys to like pay attention to the notifications, because sometimes we'll go virtual. Sometimes there'll be some venue updates. Next week, there's like a 99% chance I'm going to be gone. And my man Ben Deal is going to be sharing next week on the investor agent game plan. All right, so let's talk about real estate investing less stupid. Today's discussion is going to be based off this book, The Road Less Stupid, that was written by Keith Cunningham. Does anybody know of Keith Cunningham? Everybody heard his story? So Keith Cunningham is a very sharp individual. And I've been through his training personally with Keith. He's a very sharp man. And my understanding, like Robert Kiyosaki's a sharp man. But as my understanding of the story is, like, the story is fictional. The principles are apply, and there's wisdom in those principles. But the story of the rich dad and the poor dad in his life is all fictional. Like, Robert's a great storyteller. Keith was Robert's mentor when he was coming up in real estate and in business, even more so business. So a lot of those stories and those lessons, Keith was the rich dad. Okay, Keith was the rich dad. And so he's a very wise man, obviously, but it doesn't mean that he's perfect. It doesn't mean that he's perfect. So Keith, after building up multiple companies and exiting several of these companies, had bank accounts with tens of millions of dollars. And those bank accounts by what? Working really hard, making wise decisions, and doing business the right way. Well, fast forward a few years later, Keith Cunningham's bank accounts were empty. He's bankrupt and on the verge of suicide. Why? Doing some stupid things. Okay. So this is what a lot of his training ever since then has been, is like, know that doing the things that put us in position to succeed are actually fairly simple. They require work. They require some tenacity and discipline. But if we can avoid doing some of the stupid things, that's what a lot of people they don't spend enough time there. They focus on when we're looking at deals, oh, I can make this much. Oh, we can do all these things. And they don't really analyze the downside and the risk. So that's where it's a lot of this training is going to be from. Yeah, I just started reading this book a couple of weeks ago. And it was randomly, I was having a conversation with a friend of mine. We meet and talk every couple of weeks about business and life and family. And Keith's name came up. And I'm like, man, I need to dig into that book again. It's filled just with wisdom. It's like so good. So when I started reading a couple of weeks ago, man, I need to share this. So I'm going through it again for my second time. So let's talk about some of the principles real quick. So he starts the book kind of with this premise, like to kind of make his point of what's more important, like being really, really smart or just doing less stupid things. So take a second here. And if you could undo your 3 biggest business mistakes, things that I could have done that, or I should have done that, or I should have done this differently. And I don't know about you guys, but if I think back on some of the things, like, it's painful. It's really painful. Don't spend too much time in the space, by the way, because it can be really depressing. Okay. But it is useful, a small percent of your time, to like go back. I've shared the story quite a few times about the first house that I flipped, I lost money on, and I was almost like done flipping houses. But then I went back, put myself in that space, and I looked at all the stupid things I did and the mistakes that I made. I'm like, well, if I just fix those things, I could probably flip houses and make a lot of money. And thankfully, my second deal went really well. And thus, I've been doing it for 16 years since that point in time. But if you think about it, I think everybody, no matter how successful you are, can go back and say, yeah, I've made some really big mistakes. So how much money would you have today? How much stress, time, opportunity would you get back? And it's really the premise success isn't about doing more right. It's just about doing less wrong. Okay. And that's why I have like real estate fundamentals, or whatever business model you're execute that model and just make less dumb mistakes along the way. But we do fall into that trap. A lot of times it's the greed gland, I like to call it. Like we all have a greed gland, and that causes us to have blurred vision with certain deals and opportunities and partners. And we really need to spend more time to avoid some of those mistakes. So the premise, okay, adding on to the premise, okay, your biggest problem in business is not the market, it's your thinking. Okay. And I said, or the lack thereof, because a lot of people don't really spend time to really think things through. Okay. And I'll talk more about what he talks about, thinking time. Now, I share this every so often on my coaching groups. I'll talk about, we need some thinking time. You need to take a little time and go through this process. And that's the process. It's called thinking time. I'll outline some of the guidelines of that at the end. So this is something I highly recommend everyone add as a discipline and a habit into your life to start doing on a routine basis. And you just to tackle whatever the biggest problem, the biggest constraint in your life is. And some magic can, I'll say magic loosely, but some things can start to happen when you take time, put away distractions, put a pen and a pad and get really clear on the problem. You're going to find like the answer typically with most things is within, but we just don't take enough time to like really attack our problems. And so most of our bad outcomes, they come from unexamined decisions. Like we just didn't examine things in detail. And avoiding stupid mistakes, you don't need to be brilliant. You just need to avoid those stupid mistakes. But also it's just thinking is a skill. And a lot of times like we don't think about that. Well, he goes in depth into his thinking time process, and you'll see this is absolutely a skill that he's mastered over the years. And it must be intentional and it must be scheduled. Okay. So don't be brilliant. Just stop doing stupid things. So when it comes to thinking and decision making, and I'm going to tie some of this into real estate in just a minute. If you avoid the dumb things, success will take care of itself. Okay. You don't need brilliance. You need discipline. Emotion is expensive. Emotion is expensive. So one of the things I remember when I was going through my training with Keith, he would use this phrase quite a bit and he would call it irrational exuberance. Okay. He would use that phrase quite frequently. And he's like, that is one of the biggest problems that entrepreneurs have is they get so excited about this deal or this opportunity or what have you, that their thinking becomes irrational. Okay. It's detached from logic. It's detached from numbers. They may see the numbers, but they're telling a different story than what the numbers are really telling. And they're really not driving and drilling deep into what those numbers could mean if they play out a different way. Okay. So your emotions, understand, although I'm fairly quiet, withdrawn kind of guy on the surface, inside like a very emotionally driven. Like very emotionally driven. My wife will tell you this on the outside. She's very emotional, but like I am too. Like we need those emotions and energy, but there's got to be a balance or we will become our own worst enemy. And a lot of times like we are. Thinking can be profitable. Thinking is profitable, which is a lot of people don't do enough of it. And your excitement will kill those deals. I like this too. He says, if you didn't write it down, you didn't think it through. Major decisions must be written down. There's time, discernment required there. And if you didn't write it down, you didn't really think it through. And so clarity comes from forcing yourself to articulate. And thinking time is your highest ROI activity. This is your highest ROI activity. And what is it? Also, sadly enough, what people do the least amount of time with, like driving down the road, hopping on a call, thinking while you're looking at social media. That's not productive. So we'll talk in depth about what thinking time is here in a little bit. All right, so let's tie this into, I was going to put that in the beginning, but we're going to tie it at the end. So let's talk about how your thinking can affect you in a good way or a negative way. Deal analysis. Don't fall in love with the deal, fall in love with the numbers. So for those of you in my coaching call asking me about a deal, we have a platform called the Mesa that we use. And I'm always like, people are, Brant, I got this deal and I can see it. They're excited about it. They're talking about it. Oh, and sometimes they're concerned about it. Sometimes they're not excited about it. I'm not sure about this. And I can sense uncertainty, or I can sense the irrational exuberance. And so, I'll let them talk. I'm listening. Okay, we're going through this thing, but I'm always going to steer them back to like, well, what do the numbers say? What do the numbers say? What do the numbers say? And then we have to get the numbers, and then we have to dig into what the numbers really say. Okay, what do the numbers really say? What's the story that it's telling here? Not with just your irrational projection. We can look at that, a best case scenario, but we also need to look at what could happen, which is plan B, But what if it gets worse than that? What if there are other problems that happen? What do those look like? Okay, we always got to look at those numbers and not fall in love with the numbers. Revenue is vanity, profit is sanity, cash flow is reality. So he talks a lot about that, more from a business perspective, like building, growing businesses. A lot of people like to do the social media selfie flex and post about revenue numbers and things like that. But what is hitting your bank account each and every month? Net cash is what matters, period. Nothing else matters. It doesn't matter. I can boast some really big revenue numbers. I can say, oh, we're over 100, et cetera, et cetera. That's a vanity number. You don't see me like posting all this around, because at times like we get hit with whatever $1,000 sewer line replacement and all that kind of stuff. So that's vanity. What matters is net cash flow. That's what we have to drill down to. Like, what is the net that I'm going to get on this deal or this business or this opportunity? Assume your projections are wrong. Assume your projections are wrong. So many times investors assume their projections are right. Assume they're wrong, and then stress test them, right? They'll assume they're right and do a little bit of stress test. Oh, maybe I'm going to go over on my rehab 5%. But what if you go over 20%? Has this ever happened to anybody? Yes, it happens more frequently than we care to admit sometimes. So assume worst case and then stress test them. That's going to lead you down to a path of negotiating better, saying no to more opportunities and things like that. Hope is not a strategy. It's not. A lot of people think it is not. That will get you bankrupt, that will get you out of business and back to your job or whatever you're doing. Okay. And if it has to go right, it's a bad deal. People are like, well, if this happens and this happens and this happens and this happens. No, that's a non-starter. You've just defined what is not a deal, okay? Because you also have to ask, what if this happens and this happens and this happens on the negative side? Then it can be a really bad deal. So I'll share a short story. Many years ago, I'm going back about 5-6 years now, right around the time of COVID. And one of my good friends and business partners came to me with an opportunity to buy a land deal. It's a 100-acre tract in Angleton that we were going to develop it. Very long story short. So without naming pops, we ended up buying this 100-acre tract, and we were going to do a affordable housing subdivision development, which equated to building about 140 lots with double wide mobile homes on it. Okay. So we raised $2.4 million. We did that in 30 days, $2.4 million. We had pre-approval from the city, the plans and all that kind of stuff. I raised the money. But when we did that deal, thank goodness, like I was in that space of a little irrational exuberance. Like I was very excited about the deal. We did, honestly, like we spent a majority of our time looking at the revenue, the gross, what we could do if all these things went right. And I spent most of my time there. Thank goodness that we did spend some time saying, what if things don't go wrong? And on that particular deal, the bottom line was that we were buying that land essentially for $10,000 an acre in a very good area. It was a good buy. And I did disclose that to all my investors. I said, hey, in case unforeseen things change in the market, in the world, who knows what, this is still a safe place to park some money until we can sell the land and either return everybody's capital or sell it and make a profit. So that was one thing we had going on. And then a few months later, also a long story that I'll shorten down, a partner came to me and said, hey, here's 92 acres I think we should buy. And I'm like, well, can't do that. We're buying 100 acres. I just raised this money. This is a conflict of interest. Long story short, those investors invested with us and we bought that one with a different development plan. Said that like 5 times now. Both of those plans for both of those deals blew up. Okay. Different things from the city, zoning. They wanted us to build $1 million plus road at one of the developments, which they never mentioned before. And there was some inside politics and honestly some shady stuff going on. Both of those deals exploded, meaning they weren't going to happen. When we found that out, we returned all the capital we weren't going to use for development, kept the capital, right, that we used to acquire the land. And for 4 years at least, we've been working to sell these properties. And now they're both, one is actually already sold with owner financing on an 18-month note. The other property that we bought for $1 million is under contract to sell for $3.5 million. Okay, so that's a nice tail end of the story, but there is that valley going on for about 2.5, 3 years of a lot of uncertainty, a couple contracts coming in, busting out. We're going through COVID. We're going through high interest rates, costs going all over the place. And I had a meeting yesterday with one of my investors. No, it wasn't a meeting. We recorded an interview for the book release, and he's invested in a lot of other syndications, and we came up around the same time, and he's invested in some deals that have not worked out, big development deals. So we had to have a conversation, or got to have a conversation about that. And he's like, I know that was a really difficult time and a difficult decision that I had to make. Because ultimately it was on me, like, are we going to push through with this development thing or not? And I felt like this pressure because I had raised this money. We had already spent $100,000 in engineering, environmental studies, and all this kind of stuff. So you feel like committed at that point, you have to do it. But thankfully, I did use some of these principles, and I stepped back and took a look at it. And I'm like, I really believe that continuing on that path is the stupid thing to do. So I'd rather eat crow, tuck my tail behind my legs, go back to my investors and just be honest with them. And some were angry, some were not happy, some felt misled, all these types of things. And I took it and we navigated through it. And so this investor yesterday just felt good. He's like, for the record, I agreed with you when you made that decision. I know some didn't. But my point of sharing that is when you're analyzing a deal, if everything has to go right, it's not a deal. So luckily on those big deals, we'd had a backup plan, and thankfully both of those backup plans worked. There's a few things I can point to that's kept me in business this long and sustainable. And you guys who know and listen to me talk a lot, I was always talking about multiple exit strategies. Because if you have one exit strategy, it can quickly turn to no exit strategies and you're in trouble. So this is really important that you guys get this. When you're analyzing a deal, analyze it this way, that way, this way, like every way that you can possibly analyze it to make sure that you're investing in a way that is sustainable. Even if things go wrong, it doesn't mean that you're going to make a lot of money, but it means that you have a way to exit that deal and move on to the next deal. So important. So I've already said this, don't ask, can this work? That's what most people do. And they don't even move to the next question, or they don't really give the next question enough time and attention, which is what could go wrong. Okay. Great investors, they just ask better questions. Okay. You ask better questions and you'll get better decisions. And obviously say no often, because most opportunities are not good ones. Probably like 90-something% of the deals that you're presented are not good. I don't know statistically if that's correct, but it's probably close to correct. Okay, let's talk about operations and execution. You're analyzing deals, but a deal without a system becomes a job. So this is also when it comes down to when we get into thinking time, like what do I use thinking time for? Use it for anything. Okay, deal analysis, but also as you're doing more deals and picking up more deals, you're gonna need systems. So I would say I spend more time with my thinking time on systems and operations. What am I doing? What can I not do? How can I delegate? What is not clear here? Those types of things. So a deal without a system becomes a job. You're not going to rise to the level of your goals. You're going to fall to the level of your systems. Okay. And people problems are the real problems. I always like to say real estate's really easy. It's the people that make it difficult. It's the tenants, the contractors, sometimes partners, sometimes investors. I love my lenders and my investors, but it's a little hard to control sometimes and predict, right? So we got to spend time thinking, how do I build this team? How do I create this trust? How do I work through this issue? How do I work my way out of dealing with a certain thing? Okay. And inspect what you expect. If you begin spending time looking at the downside or problems, now you can put some inspection there and say, okay, how could I overcome this if this happens? How could I prevent this from happening? Or what if it happens? Maybe it's insurance, maybe it's some software, maybe it's, a process. So you can begin to fix things. And then ultimately, if you do this more and more and more, your business should work without you or it owns you. And some of this, you guys are starting kind of grassroots or at the ground level, but you can start doing this now and building that habit now, even if you just have a virtual assistant, or maybe you need to hire a virtual assistant or add a team member or get some AI working for you. But if you're not really spending the time to build the system, you're just going to work like an insane amount of hours and you're not going to be moving forward to your goal. And consider that The problems that you have in your life or your business, they're not typically appearing suddenly. They're compounding from ignored issues. Problems in relationships, problems with health, problems with our bank account. It didn't happen overnight. You guys created your own problems. I created all my own problems, period. Because I have been wiser back in the day. Certain problems I'm even dealing with now, I probably could have prevented, put myself in a better position. It's just the truth. Personal discipline, it is required. I love this. The fastest way to get rich is slowly. The fastest way to get rich is slowly. How long does it take to get wealthy? I don't know. Like maybe there's some exceptions to the rule. I didn't buy crypto in 2012 or whatever, or Bitcoin or whatever. So there's probably some exceptions to the rule. But I would tell you that from some mentors that I've had in my life and truly like what I would call wealthy individuals, they didn't build it overnight. And I know a lot of wealthy people that I've discussed. There's one thing to make a lot of money, and then there's a different thing to create and maintain and keep wealth. Wealth management is a real thing. And if you don't start implementing some of the disciplines that it takes to create a successful business, a successful real estate portfolio. Everyone can get lucky at times in certain seasons and certain markets and business, but I've known a lot of people that have fell into those trappings and they create success for a short season and they lose it. And I've made some stupid mistakes over the years where I put myself in a bad position where my back was against the wall. Because why? I didn't have the disciplines and the habits that the wealthy have. So one of the little things, but it's a big thing, is like taking the time to read each and every day. This is something that I do among with other disciplines that aren't always fun. I don't always want to do it. I don't always want to read my Bible every day. I don't always want to take time and pray. I don't want to exercise. Sometimes like I feel too busy to even invest in my personal relationships. I don't want to eat healthy. I don't want to work on my business. Those are things that I do each and every day, pretty much each and every day, period. And it's working, right? It doesn't work fast. Okay, it doesn't work fast, but whatever your definition of getting rich or becoming wealthy is, that it will work, but you need to give yourself, a lot of people are trying to do all this stuff in a year or 2 years. No, you might need a decade or two. You may need 3, but if you keep going on this path, it absolutely works if you don't give up. Patience is a competitive advantage. A lot of people, we need more patience at times. And then the other side, the other piece to that is too, though, is there's sometimes where the opportunity lands and we need to be able to pull that trigger and be a quick decision maker. But also sometimes that decision is having just patience. Like, nope. You saw this, Nathan's, where like there was a deal that my acquisitions guy was kind of forcing to go under a contract. Well, we went under contract on it to wholesale it. And there was a little miscommunication that happened with the seller about the price. And I was almost leaning to buy that property, the one in the beach house. And I'm like, this is what the numbers say. You can be angry. And he was angry. He was an angry individual. He was an angry elf. And so I'll be patient. It may come back around. It may not, but it's okay to say no. Like more times than not, you just say no. There it is. Your biggest losses will come from breaking your own rules. How many times have we done this? Know what your rules are. Know what your fundamentals are. And just don't break them. Just don't break them. Thinking time, once I teach you thinking time, my advice is it not become optional, because it will become your highest ROI activity. So this is something that I want everyone to consider, like putting it onto your calendar, whether it's, weekly, monthly, what have you. Like really, really consider that. So let's talk about thinking time. And this is where he spends a lot of time in this book just talking about the thinking time process. So thinking time in practice. Let's talk about first. So one, I don't think he uses this phrase. I kind of came up with that, but just kind of like see it as a sacred thing. Okay. If you're taking time to read, pray, what have you, like that's kind of a sacred time. I would say like this is a sacred time as well. Like then like you need to give it the respect and attention that it needs. So it should be scheduled. Okay, put it on your schedule. A lot of times for me, this is early Saturday or Sunday morning. Typically for the wife and kids are up and things like that. I have a little time. I get my coffee. I'm in my chair. I've got a little chair that I sit and read and write and do stuff like that. Like, it should be a protected time. You're putting away your phone. This is not doing it on your computer. It's not doing it on your phone. There's too many opportunities for distraction there. No electronics. Just get them out of the room, turn them off. You don't need books. You don't need anything else. You need piece of paper, a pad, whatever, a pen, and the right questions. So thinking time done properly is you come in preloaded with the question that you really want to answer. When I say questions, it's good to frame that question maybe in different ways. Okay. I'll talk about that in a second. But that's all you need. A time, a pre-scheduled time, pen, pad of paper, and the question. This is the big problem or constraint that you want to focus on. Or maybe it's just something you really want to improve. Okay. So come preloaded with your questions. That's why I put in parentheses. It can be multiple questions, but with one focus. I've got some example questions in a little bit. These questions are like the question is like, that's the power. The power is in the question, because if you ask the wrong question, if you ask a poor question, it's going to lead to a poor result. Like, why am I broke? Okay, question that I'm considering with one of my companies, it was like, if I had to start all over again today, what would I do differently? That's a powerful question. I just got goosebumps thinking about it, because there's one thing I've been doing for a long time a certain way because of habits. And a lot of us will find that we've done that. And this can be a marriage, relationships, health. Like, if I were starting over today, what would I do differently? That's a powerful question. That's going to generate a different response than like, why am I broke? You see what I'm saying? So you need to spend time before you go into thinking time with that question or questions about one focus. And you can play around when you go into thinking time. You can also play around with that question if it's not giving you the output that you want. Start playing around with that question, changing the framing, because now your pathways in your brain go a little bit different direction to find that answer. So the process, get that piece of paper out, write the question down at the top of the page. You brainstorm and adjust the question as needed. And then you just start dumping things. Write it, not just thinking, but thinking and writing it down. I don't know what it is. I do a lot. I'll take notes on my computer and stuff like that. But when I have a pen and a paper out, like, I don't know what it is, but just something, like Ben's got his notepad out there. It's just like, it's something different. I don't know what it is. But science has proven this too. Like, the pen and the paper thing starts to happen. You see it, you visualize, you're thinking, you're processing it, and just don't filter. Like, be honest with yourself. Be very vulnerable with your own responses. And as you're writing those things down, what are you doing? You're identifying risks, blind spots, and certain assumptions that you have. So me, with this particular business, I have a lot of assumptions based on a long track record of how we're doing things. And now I need to start questioning my own assumptions, because how I was doing things 10 years ago, well, we didn't have AI, and we didn't have this software, and we didn't have this team, and we didn't have this, that, and we didn't have high interest rates. We didn't have all these things. There's different. I need to challenge my own assumptions. And then as you work through whatever that problem is, you need to force clarity, meaning the outcome of thinking time is to have a direction to go. You're forcing clarity in this. So you're blocking out this time. 30 minutes to 45 minutes is a good amount of time. I think this has been proven too. Like, it's really hard to focus on one thing much longer than that. Like, our brains need a break. So a 30 to 40 minute time block, that's all we're asking. But you do want to set the goal of, like, when I come out of this thinking time session, I'm going to have a solution. That solution could be no action, but most likely it's going to lead you to, I need to do this, this, and this, whatever it is. But you do want to come into that time frame, like, I'm leaving here with an outcome of something that's going to move me forward. And that goes back to, especially if you're really stuck. If you're stuck, maybe you're, maybe in a dark place, you're depressed, you're feeling like you can't do it, things like that. How we can immediately get out of that space and that negative energy is we focus on a more compelling future. And that's great. But if we can back up a more compelling future and more desirable results and more desirable outcome with some specific things that we can take action on, now we're controlling what we can control and moving us to that place. This changes your life. You start compounding this week after week, month after month, you're going to be in a totally different place in a year from now. So here's some of the questions some frameworks you can use for questions. You may say, I'm broke. I don't have enough deals. I'm working too much. So a lot of times we will identify the symptom. It's the symptom, but we have to dig down to the root cause. And this is not as easy as it seems. This is why you have to have this space and create this time. We want to drill down to the root of the problem. Okay. So that's why we need to ask this question a few different ways. So what's the real problem I'm trying to solve? What's the real problem? Okay, what could go wrong with this deal? Hit on that. What assumptions am I making that could be false? Like with me and my land deal, there was a lot of things on spreadsheets and things like that, but there's a lot of them that could and ultimately turned out to be false. One of the assumptions was the city giving us pre-approval. This is going to be, they're like, oh, this will fly through. It's not a problem. I had it on recording too. And then we close and everything changed. It's weird. Okay. If this fails, why will it fail? This is not saying that, hey, this is going to fail. It's just saying, hey, if this were to fail, why would it fail? What am I not seeing? What am I not seeing? I love that question. I use that quite a bit. Like, what are the risks that we don't see? A lot of times we just don't think about those things. What am I not seeing? What would someone smarter than me do here? What would someone smarter than me do here? So your own board group, you can build a board group in AI with whoever you want in your board group. It could be Robert Kiyosaki, it could be Keith Cunningham, Elon Musk, whatever, Grant Cardone, and then like you can start playing around with AI. Don't do this in your thinking time, but you can do it like, what would so-and-so do here given these circumstances and these situations? And then your brain will kind of go to that spot, go to that place. I've done that with certain mentors. I'm like, what would so-and-so do? Like, I know I'm going on a coaching call, I'm in this position, and then it kind of takes your brain to go through a different logical path than you probably would have gone on your own. Where am I being emotional instead of logical? What I would say on that also, when it comes to sales, when it comes to like buying real estate, for example, what mind state are most of our sellers in? They're in an emotional space. And honestly, we want them to be there because they're not making the wisest decision. They're feeling like they're making the best decision is for them, and ultimately that's their choice. And we know that if a seller moves to a logical mind state, that they're probably not going to sell at a discount to an investor because they know, hey, if I have a little patience, if I have a little discipline, maybe if I do a few repairs, I can make a lot more money. I'll also tell you that's part of our sales process is educating them on all the things that they could do, but we do sprinkle in the truth and the reality, which is kind of like we push the pain points, but you're going to have to do this, then they go back to the emotional state. I just want to be done with it. Okay, we can help with that. We do this to ourselves. We'll get in this emotional state, and the emotional state is either going to lead us to two things. One, you're just going to do it because you're type A and you're like, I'm just going to do this thing and figure it out. And I've done that a lot. Or it's going to be like, no, I can't do it. But you really should have done it. You really should have, but you didn't take time to get out of that emotional state. And that's where your logic needs to come into play. And that's where I was at with my partner on that second land deal. We had just closed on the other one. And I'm talking like, I think it was like 6 weeks after we closed on it and bought 100 acres. This 92-acre tract was just a couple miles away from the other one. And I said, I just raised all this money, brought all the investors into this deal, pitched it is what I did. And I believed in what I was pitching, but I pitched it like, this is the greatest thing, we're going to kill it, crush it, How am I going to go put this out into the marketplace? We're going to buy these 92 acres to do a similar but different development and say, this is a great opportunity. And I had conflict with that. And I told my partner, I'm like, I can't do that. Why? Because I was emotional. I'm like, I can't do it. One, I had just raised all that money. And number two, it was a conflict. So I thought my integrity was going to be sacrificed possibly. And I'm like, I can't do that. So I was very emotional. I was like, dude, no, I can't do that. And he's like, all right, man, just think about it. And he said the magic words, just think about it. He's like, if nothing else, if you're no, it's fine. He's like, but come on, come over when you have time next week. Let's go drive it and walk to it. I was like, all right, let me just think about it. It doesn't mean I was going to do it or say yes. I'm like, let me just look at it and be logical. He's like, all right, here's the deal. Here's the property. He's like, it's cheaper price per acre. And you could hit like a 6-iron to 288. Like we're right close to the freeway. There's a major thoroughfare here, and right here. He's like, here's the story. Here's why I like it so much. So I went to my logical brain and I said, is this a good deal? Is this a safe deal? Does this make sense for an investor? I check all those boxes. Do we have a development plan? Yes. Could we have a plan B if we just need to sell it and dump it? Yes. Is it in a great area? Yes. Could it possibly go way up? Yes. But what's our downside? It's land, it's safe. So I checked all those boxes, and then I went down to like, how could, asking myself questions. And then we were doing this together for a period of time. I asked my partner, I'm like, let me just think out loud. Like, how could I communicate this to all the people that just invested with us and still not soil my name, or have them upset at us? So I wasn't planning on talking about this, but this is the process in action. So I said, okay, here's what we could do. This may make sense. Let me put together the deal, what we like about it, why we think it's great, why we would consider it. And I'm not going to put this out to everybody. I'm only going to present this to people that just invested with us, because I don't want them to hear about this without them hearing about it first. Okay. So we put all this together, and I said, in the meantime, go ahead and put it under contract so we don't lose it, just in case. So he put it under contract, and I'm coming up on time. I'm going to wrap up. But he put it under contract. We got all the numbers, and I said to the investors, I said, hey, Dave and I just went under contract on another similar property very close to this one. So I want to talk to you all about this and let you know before we tell anybody else about this, just so you know what's going on. And we did a Zoom webinar. I said, here's the deal. This may seem like a conflict of interest. I understand that, but here's our plan. We're doing a manufactured home subdivision development here. We think this would be great for a mobile home park and boat and RV storage, because it's right off the freeway, not far from the coast. And we think there's some economies of scale when we're doing dirt work, when we're buying homes, we're getting a mobile home license. We can do both of those things for two different markets. And we think that it's a great opportunity. We're already going to be working down here a lot with the city, the county. And I just don't want anyone being upset with us, because we are going to begin raising money. And I don't want y'all to think that this development's going to get any lack of attention because of this. We think it's going to get more, and there's going to be some benefits. So that's my thesis. And I just want to put that out there and letting you guys know. So if you see me marketing, promoting, that's what's going on. Long story short, I didn't have to do even one single raise. They all funded that deal, and we bought it and acquired it. That wouldn't have and that property that we bought for roughly around $800,000 is now under contract to sell for $2.5 million. We actually already sold it. We're on owner financing. We got $500,000 down. It's an 18-month balloon payment, and they pay us approximately $150,000 every quarter in the meantime until the big payday. So if I hadn't gotten myself out of that emotional state, because I was very heavy in that emotional state, I wouldn't have went down the logical path, right? I think my partner was like, well, just think about it. Just think about it. Okay. So think about it. What's the book? Get Emotional and Go Rich. Has anybody read this book? Get Emotional and Go Rich? Nobody's read that book. The number one self-help business book ever is what, Duvon? Nathan. I meant Nathan. Think. You were thinking about it. So you must think and grow rich, not get emotional. Go. That's my next book. Get Emotional, Go Broke. Think and go rich. It's just true. All right. So wrapping this up. Whenever you're going in your questions, what are some variables that matter most to you in that situation? Are you focused on your cash flow? Or are you focused on your ego? All of us have an ego. You got to drop the ego. What's the downside risk versus upside reward? I like this. If I had to explain this deal in 1 minute to an investor, would it make sense to them? Because I get approached about a lot of deals. So do you, right, Robinson? And they're like, well, I'm thinking about doing this and this and this and this and this. I'm like, I don't understand. I'm sorry. The conversation about Homeward too, I'm like, the seller's going to have a hard time understanding that. We need to simplify what that looks like. Like, I don't know how Orchard is so successful, because I'm probably average IQ, and I'm like, I've heard it a couple of times. I don't understand your business model fully. It's hard to understand. So we got to be thinking about that when we're going to talk to an investor or a lender. Like, does this even make sense? And how can we simplify that? Our elevator speech sort of things. And then when we're asking questions about deals, a lot of times we're figuring out ways to say yes, but we need to figure out how to say no. What would make me say no to this deal? Now what you have is a baseline for negotiations, and say, it's like, I don't want to get into politics right now, but Trump has said, this is the deal terms. It's either yes, or if not, it's everything's no. I need these things. He gets real clear on his negotiations. I'll tell you that. We need to do the same thing. Some people, I'm not going to go on a tangent, they say no too often. They need to say yes on occasion, though. There's a converse to that. So you don't get paid for working harder. You're going to get paid for thinking better. All right. So if you need a framework, we've got the 5 fundamentals of real estate. You don't need to be a genius. You just need to continually do things that have been proven to work and avoid doing stupid things. All right, we're going to wrap up. Get registered now. Hit the QR code. Hi. For those of you who are at a place in your business and you're like, I'm stuck, I'm not where I want to be, where I need to be, where I know that I could envision myself, and you need to launch, you need to grow, you need to start your business. You just need to level up to the next level, whether you're a real estate investor, your real estate agent, wherever you're at on the investing arena. Love to talk to you more and spend a little time to look and see what you're looking to create in your business. So if you hit that QR code, ask you to fill out some real quick information. We'll schedule a time, hop on a call, and see which direction is best for you. Can plug you into our team at the Wolf Pack. Several members are here. If you're an investor agent, if you're focused on the investing side, raising capital, I'd love to talk to you as well about our Wealth Passage program and how that can help you get the results that you're looking to get. Boom.